When President Donald Trump took office in 2016, one of his biggest promises was to make the American economy great again. Trump came back for a second time with the same promise in 2025. However, the news coming from the financial world today says the opposite. The Chinese stock market outperformed the US under the Trump administration. While American stock markets are shaken, Chinese stocks are breaking records. Global investors now see opportunities in China. Artificial intelligence, the digital yuan, and giant tech companies are putting China on top financially. So how did a country that Trump declared war on economically emerge victorious from this war? Let's take a look at the beginning of Trump's economic war with China. In 2018, the Trump administration launched a major trade war against China. The rationale was simple. China was exporting more than the US, but its imports remained low. In addition, Trump and his team claimed that Beijing was violating American intellectual property rights and engaging in unfair trade practices. The fuse of this trade war was lit when Trump imposed high tariffs on China. Initially, tariffs were imposed on $50 billion worth of Chinese products, but Beijing responded in kind. Thus began a growing economic conflict between the two countries. Although Trump's trade war targeted the Chinese economy, it did not have the expected impact. So, how did the Chinese stock market rise and outperform the US despite the US's harsh economic policies? As of 2024, China's financial markets have caught up and even surpassed the US in many areas. The main reasons for this were as follows. China's growth potential attracted the attention of investors and led to a significant inflow of funds into the stock market. China's development of a digital currency was a game changer in the financial markets. Alibaba, Tencent, and new generation technology giants accelerated China's stock market rise. It was especially noteworthy that Alibaba founder Jack Ma met with Chinese President Xi Jinping after a long absence from public life. This development was interpreted as a strong signal of Beijing's support for the private sector. On the other hand, the Chinese government announced comprehensive stimulus packages to support economic growth. Aiming to reduce uncertainty in the markets with interest rate cuts and private sector support, the Chinese government focused especially on the technology and real estate sectors. China's steps have revitalized the interest of Western investors. Executives of major companies attended meetings organized in Beijing and evaluated the opportunities in the Chinese market. In addition, pharmaceutical giant AstraZeneca's plan to open a new research and development facility in China was one of the important developments supporting this trend. As a result, Chinese stocks overtook American stock markets. The CSI 300 index, the index tracking the largest companies on the Shanghai and Shenzhen stock exchanges, rose 5.2%. The MSCI China index rose 28% and the Hang Seng index rose 26%. In the same period, the US stock markets collapsed, S&P 500 down 6.3%, Dow Jones down 4.4%, Nasdaq down 10.8%. For the first time, China has emerged as a serious economic competitor to the US. Why did US stock markets fall? The Trump administration's trade wars have hurt American companies. In particular, tariff policies and uncertainty have shaken investor confidence. And critical problems have emerged in the US economy. Consumer spending has fallen, investor confidence has been shaken, and fears of recession have increased. So what did China do during the same period? Despite deflationary pressures and a slowdown in domestic consumption, it made huge investments in the technology sector. The Chinese government announced major incentives in artificial intelligence, chip manufacturing, and the digital economy. In particular, China's advances in artificial intelligence are challenging the US. DeepSeek, a little-known China-based technology company, has unveiled its latest AI chatbot, which it claims can rival market leader ChatGPT, developed on a shoestring budget of $4.6 million. DeepSeek's emergence is the latest catalyst for investors who increasingly see Hong Kong and China's battered markets as a potential source of opportunity amid Trump's erratic tariff policies. As a result, shares of Nvidia, Microsoft, and Alphabet Google fell sharply. The US tech sector has become vulnerable to Chinese competition. It's not just AI, China is also making a big splash in the electric vehicle sector. China's BYD is outpacing Tesla in the Chinese market and is investing heavily to expand into Europe. The Hang Seng Tech Index in Hong Kong is up 35% since Trump took office. This shows how strong growth China is experiencing in the tech sector. All in all, we can say that a red alarm is sounding for the US. The Trump administration's trade wars and economic policies have not prevented China's rise. On the contrary, China has become more economically resilient. And if the American stock markets continue to be turbulent, investors may shift more and more to China. US technology leadership could be shaken. China would then become a stronger player in the global economic system. However, the rise of China and the fluctuations in the US stock markets are shaped not only by numbers, but also by the comments of global investors and experts. So, how do leading figures in the world of finance assess these changes? Investor and portfolio manager Taosha Wang says, Chinese equities have become a safe haven in the face of global changes, such as US political instability and the proliferation of artificial intelligence. In his view, this is not a zero-sum game. Rather, it reflects the fact that the US is no longer an absolute financial power, but has become part of a multipolar world. The White House, however, offers a different perspective. Press Secretary Caroline Leavitt argues that the stock market fluctuations are just a snapshot, and that the US economy is in transition from the chaos of the Joe Biden era. On the other hand, Richard Harris, CEO of Port Shelter Investment Management, summarizes the picture more clearly. The US has had a good run, but it's coming to an end because of Trump's anti-economic policies. China, on the other hand, has been going through a difficult period, but is showing signs of recovery. These comments signal the beginning of a new era in the world economy. How has China resisted US pressure, not only in the stock market, but also in its overall economic structure? Trump's tariffs could have upended the economies of many countries, but China followed a different strategy. Beijing has taken important steps to counter the economic pressure from the US. It reduced its dependence on foreign trade by increasing domestic consumption. It turned to markets outside the US, signing trade agreements with Asia-Pacific countries. It has modernized its economy by investing more in the high-tech sector and financial markets. These moves have boosted China's stock market and attracted investors. As China's economic power grew, the US administration began to take steps to counter this rise. However, the measures taken by the US in this regard have ushered in a new phase of trade wars with China. In particular, the tariffs initiated by the Trump administration came at a time when China was struggling with economic difficulties. But Chinese officials continued to make counter moves, arguing that their economic fundamentals remained strong. China's efforts to persuade the US to end the tariffs appear to have been ineffective, and Chinese officials are struggling to reach higher-level officials on the issue. The Trump administration raised tariffs on Chinese imports to 20% and imposed 25% duties on some goods from Canada and Mexico, citing their failure to stem the flow of fentanyl and related chemicals into the US. The move marks a significant escalation in Trump's trade policy and links tariffs to the devastating opioid crisis. China, a major supplier of fentanyl precursors, says it is trying to stem the flow of illicit substances. Beijing points to several high-level meetings with the US since 2024, but it accuses Washington of weaponizing trade and denies responsibility for America's demand for the drug. Recent negotiations between US and Chinese officials have reached an impasse, catching the parties off guard. China, on the other hand, believes that the White House has not taken clear steps to lift the tariffs. But US officials argue that these requests have been communicated through diplomatic channels. Chinese officials say Washington's messages are inconsistent, and it is unclear what concrete steps need to be taken to fulfill the conditions. However, US officials insist that Beijing has been provided with the necessary information and point to numerous diplomatic meetings. Asked whether the Trump administration had communicated enough on trade and other economic issues, Chinese Foreign Ministry spokesman Mao Ning called for dialogue and consultation on the basis of equality and mutual respect. He said Beijing would respond to arbitrary pressure with countermeasures. These remarks followed Mao's harsh remarks in which he accused Washington of using fentanyl as a pretext for the tariff hike. On the other hand, Trump had a clear message for China. They will not take advantage of us. US President Donald Trump lashed out at China ahead of the cabinet meeting on February 26th. We will have a good relationship with China, but they will not take advantage of us. Criticizing the Biden administration's China policy, Trump described the current situation as very sad. Da Wei from Tsinghua University in Beijing spoke about the US crackdown on fentanyl precursors. According to him, even if China stops exports, the global supply chain will be quick to find alternatives. This raises big questions about whether US pressure on China is actually working. So what does China want? According to Singapore's former UN ambassador Kishore Mahbubani, China's goal is clear: to reach a trade agreement with the US. China opening its market to more American exports and investing in the US could mean a win-win deal for Trump. On the other hand, the US has its own economic problems. While Treasury Secretary Scott Bessent has described China's economy as the most unbalanced in the world, experts say the US trade deficit is not only caused by external factors, but also by Washington's spending policies. Economist David Roche emphasizes that the US is running a trade deficit due to its inability to generate enough savings, while Blackstone CEO Stephen Schwarzman, a close Trump ally, argues that tariffs will boost US production in the long run. However, market data and investor behavior show that China has gained a stronger position in this process. It seems that trade wars do not always produce the expected results. Trump's war against China has actually strengthened Beijing's hand. So what do you think? Has Trump's trade war really been to the detriment of the US? Or will we see a different outcome in the long run? Share your views with us in the comments. Thank you for tuning in.